Well, Libor is going away on June 30th of 2023. And the most current data that I've seen on it is that there are still roughly $610 trillion in notional value, which means nobody knows the value at risk, of contracts that still have to transition into that new benchmark. So I personally think there will be some kind of crisis, and I could be wrong, and I hope I am, but I don't think I am, because this has never been done historically, ever. So I think there's going to be some kind of crisis that happens before that to justify lots of stuff, but cover up this transition. Because they tried it with 80 trillion, I believe it was October 2019, and it was a big, fat fail. So I think that next upcoming crisis within the next 6 months-ish, give or take, okay, is going to definitely drive people to the safety of gold and silver. But yeah. Right, both the monetary metals. This whole system is a con. It's a huge con, and every con game requires confidence. So as I've been watching over the years, it was 2015 when, and keep in mind too, at the IMF, almost every country in the world, that's the Treasury Secretary and the central bank chief, is part of the IMF. So they all get together and have conversations regularly. And for a while, we saw a lot of cooperation between the central banks. But in 2015, the Swiss central bank had vowed to retain a peg to the euro dollar. And there's a whole lot that goes into it. We don't have that much time. But, and they kept vowing that it was like the most important thing. And then 2 days after they came out with this big vow, boom, they broke that vow and they depegged from the euro. So the central banks lost confidence in each other because they now knew that every central bank will do what's in their best interest first, regardless of what anybody wants. But it still had the market and it still has the public until last August. And I got to tell you, this really, really surprised me, and I think indicated as well how close we are to the next crisis. And so they kept promising it, and then what they do, they came out with a 75 basis point raise. So what did the central banks just show Wall Street? You can't trust us. We're going to do what's in our best interest first. And that's a big deal, that they gave that confidence level away. So there's only one more level of confidence left, and that's the public having confidence in the currencies. And this rapid inflation erodes that confidence because it reveals the con game when the currencies are losing value that quickly. They can do it slowly. We have what the central banks define as financial stability. Now, you and I hear that, and what do we think? Well, that means prices are going to stay the same. They're going to be stable. No. It is the activity of the public, right? So if inflation is at a low level, say 2%, then the public doesn't ask for a raise. They don't have a problem. They don't change their spending patterns. That's the price stability that the central banks are seeking, which is why they have to raise unemployment. Because God forbid, the general workers should make more money. It's okay if the CEOs do. That doesn't somehow feed into inflation, even they're paying these guys millions and millions of dollars. Yeah, that doesn't impact inflation. There's just a little bit more than 3 cents on the dollar. But you see, when they created this system, they knew two things. They knew more than this, but two key things. Number one, they know that people marry the legal money of the state. So when they're going to make these transitions, they need to keep it looking as normal as possible, okay? And number two, they know that not one man in a million understands inflation, because inflation causes nominal confusion. And here's nominal confusion. You had a $20 bill 10 years ago. You have a $20 bill today. Nominally, they're identical. but what that would buy 10 years ago, what that would buy 6 months ago,
Yeah.
and what it buys today, vastly different.
Yeah.
So yes, they've been pulling this, I mean, by design. People do not realize, but inflation is actually an invisible tax that governments do not need to go back to through legislation and make it visible. And for corporations, the inflation has enabled that income and wealth inequality. Today, I think the average wage is something like $67,000, and you need two people making that, and they're living paycheck to paycheck. You know, the people marry numbers, right?
Yeah.
So even when they create an illusion of something going up, the real trend is in the purchasing power. Doesn't matter how many digits or pieces of paper you have. It matters what you can convert it into. So this has certainly not always been true. And in the future, that will not, I assume it will not be true. But at the moment, I am, other than some cash, I am an all tangible gal. Central banks, they say, once we go completely digital, we've got a CBDC, even if there's still cash out there, there will be no limits on how low they can push interest rates. And they intend to have their finger on the button constantly. Because right now, when they create policy, it takes like 18 months for it to run through the system for them to see if they got what they want. But you mentioned earlier about the purchasing power, right? There's only 3 cents left. So, and the key tool that they use are interest rates, which also just had a massive breakout, which indicates a lot of change is afoot, pattern shift. But typically, since the early 80s, when they pushed interest rates intraday up to 21.5, every time we've gone into a recession, they've dropped interest rates 5.5, 5.75%. That stimulated borrowing and spending. But can we do that now? They've been anchored at 0 since 2009. And yes, they're pushing rates up so they can lower them again. So they're creating this next crisis between their money printing and the interest rates. They're out of tools, and they have to attack your principal, which is what negative rates are all about. Last numbers I saw in the US, 16% of the adult population had on some level had their hands on cryptocurrencies. That you need 3% for adoption, so they have adoption. People are freaking out. Don't worry, we just put a whole bunch of CBDCs in your personal account,